or on the internet or my podcast. We make it simple. We try to break it down so you really understand why the market is going up, or why there's continued inflation, or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com.
Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Brandy.
Bye.
I guess I'm not at the point where I'm calling this a bubble. I'm looking at this as extreme valuations, but I still think that, to your point, these companies remain healthy. And when you look at their debt issuance, it certainly has crept up, but that's been a relatively recent phenomenon.
You sound insane. Do you realize that? Medicated.
They are insane. Good afternoon. Okay, NVIDIA, I told my members last night or yesterday, they're going to rally NVIDIA, no question about it, okay? And there's going to be a big short covering rally, but no new money's coming in. And let me explain what happened today with your NVIDIA. Now, we've been short NVIDIA. And if you take it NVIDIA, I'm going to put up on my chart here for a moment, and I'll show you exactly what's happened. All right. Here we go. All right, so NVIDIA. So going back, you can see the trend in NVIDIA. We got great information. We got great warnings that NVIDIA was in trouble. Let me put on my little tool here, okay? And let me show you. We knew in here, look at this, it started to turn yellow. That means money started to come out. At the peak, where the FOMOs were buying, they're always buying at the very peak, at the very top. They never buy where they're supposed to buy. Also, they're buying all the way down with a downtrend, a severe downtrend. Now, what happened, and look how it remained yellow, warning us not to be buying this stock. You never buy a stock when the stock's going up and the trend's going down. That's suicide. Exactly what happened today. Look what happened this morning. They came out. They said they beat earnings. Everybody got excited. Everybody jumped in, not my members. I said, no, if you didn't get out before earnings like you should, or at least reduce your earnings down to minimal anytime you have an earnings coming out. And then I said, if you didn't get out, which was a mistake, sell into the rally, because it's a short covering rally. What does that mean? When right this morning on the opening, as soon as the stock started to take off, look at the trend, look at the volume. You knew immediately there was no new money coming in. There was no new money, no institutional money. It was the same money that were shorting, covering their positions because they're getting killed. That pushes up the market. It makes it appear as if the market's doing well. Wall Street, jibber jabbers on TV, they should be saying to you, like I said to my members this morning, do not chase this. This thing is going to give it up. Do not chase it. Do not chase this. The trend was going down. Stocks going up. That's a huge short covering rally trap. No new money. Wall Street knows this. They know the psyche of the people. They know how they work. They can put them in a trap very easily. Wall Street knows that the tourist, okay, or the FOMOs, will never, ever look at a trend, or do they ever look at volume? Almost never. They don't even know what it is. All you have to tell them is buy on a dip. Buy on a dip. And here's one of the biggest sins in trading, and people should be arrested who tell you to cost average down. That is another sin. I can't believe people were cost averaging down. You never cost average down into a losing position. you add to your position when the stock's going up, not down. But they know, Wall Street knows how to trap the people. They know the psyche. They know they're not going to look at key indicators. They know that there's going to be over-concentration in too few positions. But they know the tourist, the retail investor, is not going to understand that, not going to look at it. They're investing in illiquid positions, a lot of people, looking for this great little deal. No one's going to tell them not to do that. And never fall in love with a stock. Never just fall in love with that stock, because it'll go against you, it'll bite you. And the worst thing that's going on now is excessive use of margin debt. People do not have money to buy these stocks. They're using margin. And again, part of this $300 billion they put in this week and to increase the money supply was to increase the margin debt, and to give money to banks to keep them alive. But did you know, going back to NVIDIA and what happened today, let me get my little indicator out. That's a great indicator. I love my little indicator. I can pop that on and I can tell exactly if money's going in or money's going out. That's all you need. People still are going with, I got to know the fundamentals, trailing PE, forward PE, the PE ratio, price to sales, price to book, return on assets, return on equity. Who the hell cares? With today's technology, we don't care about any of that stuff. All that fundamentals will show up on your chart if you have the right chart, like my chart, which follows the money. If you look at the difference between most charts, they're totally the opposite of mine. I designed our own charts. I just want to know pricing. But let me move on here. So this morning, what happened? So NVIDIA last night reports, and they beat. So the analysts, they beat the estimates. They beat the sales. They beat the earnings estimates. Sales were estimated at $54 billion. Oh, they came in at $57 billion. Oh my God, we beat. Earnings estimates, $1.26. Oh, but they came in at $1.30. They beat. Well, get in, buy that stock. See, Wall Street knows that people are going to get excited. They're not going to look at the trend going down. You're just going to see the stock going up, and they're going to get in and say, get me in. What's it at now, 186? Get me in now before it gets to 190. Get me in. They know that. They know how to play that trick. So, but let's think about this. So the estimates were $54 billion on sales. The actual was $57 billion. Earnings estimate was $1.26, but the actual was $1.30. They missed. Now, think about this. Analysts, as I said, are always wrong. When they predict the earnings beats, they're wrong 4 out of 5 times. 4 out of 5 times. What are you, nuts? Are they just dopes or are they incompetent? No, not at all. They're part of a scam. They're part of what's called financial engineering. So here's how it works. Wall Street are not nice people. They are obsessed with wealth. The top 1% controls 90% of the stock market. So just take in the past 10 years, wealth has increased for the top 1%, okay, by $42 trillion. The Main Street working class wealth increased by $335 compared to $42 trillion over 10 years for the top 1%. So obsessed with wealth. They use tools that give them the edge, give them the advantage. Financial engineering, give you an example. QE is one of their favorite tools. Increased money supply. Quantitative easing, just the opposite, one of their tools. So between QE, QT, and increased money supply, those are powerful tools. Painting the tape. They always paint the tape with lies, like, oh, I want the stock to go down. We got our best customer. So let's say you were Goldman Sachs, and their best institution is, let's say, the police in New York City. They handle their pension fund for them. Well, they got to make some money for them. So they'll paint the tape, and they'll say the head of the banking committee died today. Right? and all of a sudden everybody sells off the stock, right? So they'll paint the tape with any lie that benefits that stock to make it go up. The premier tool, besides QE, QT, increased money supply, painting the tape with lies, front-running your stock, yes, front-running your stock, the premier tool over all these years is inside information. That is absolutely the best. We got a great example. Nancy Pelosi and her husband, they increased their stock wealth from the first day she entered Congress in 1987. 1987, she and her husband were worth $1.5 million. By 2025, the day she retired the other day, they increased their stock wealth by 16,000%. Their gains are up 16,000%, from 1.5 million to 130 million. This is the best tool ever. Inside information. And who has the inside information? Congress and Wall Street. They deliver back and forth to each other. Now, what's the nightmare position for the CEO of NVIDIA and Apple and the rest of them? What is it? The nightmare. They don't sleep at night. These publicly traded companies are so worried about the big institutions, especially hedge funds, taking short positions against their company stock, forcing it down. This is their nightmare. So, what happened today? There's less chance of a rate cut. So they're saying, well, that's the reason why the market went down. Who cares? Doesn't matter. It was going down not because of they're not certain of the rate cut. It's going down because of a host of problems that are going on with AI. A host of problems. Returns. They can't get the proper returns. Look at the money they're investing. Unbelievable. Oracle. They don't even have the money now to keep the lights on. $35,000 they have to spend just to keep the lights on. They're losing money left and right, Oracle. It takes so much money to keep these AI companies going. But NVIDIA, okay, the FOMOs and the tourists chased NVIDIA up. They chased it. We didn't. My gang member didn't. They chased it up. They didn't realize, the FOMOs and the tourists, that the only reason why the NVIDIA was going up today, it wasn't that new money was coming in. It wasn't. There was no new money. It was the same people who shorted, made a mistake, and then they decide, I better get out, and they buy their position back. And so the FOMOs were buying NVIDIA when it was peaking today. They were buying it right at the top, at the high of $196. And it came all the way back down to 182, losing their butt. They always do. Because they didn't realize that this was a short covering rally. There was a panic. There's no new money coming in. But they also don't understand this, that what Wall Street understands, what I talked about a moment ago, the psyche of the trader. You know, the psyche of the trader is simple. They always blame a losing trade on something or on someone else. They never blame themselves. They never say, you know, that was a stupid trade. That was a lousy trade. What did I do? I want to learn from it. So Wall Street knows they'll never do that. Wall Street will turn around, okay, and just let them blame whoever they want, but then they give them an out. Oh, you know what you can do? You can cost average down. Don't worry, you're losing money, cost average down, which is the dumbest thing in the world to do when you have a downtrend. When the market's going down, you never cost average down, but they make a fortune making you cost average down. And that's what was happening all the way down when NVIDIA was at the peak. When NVIDIA hit its peak around October 29, it was around $212. It started to drop. They kept cost averaging down. Cost averaging down. That is so stupid. You never add to your position until it is going up, making a new high. In fact, when a stock pulls back like NVIDIA, as I told my members today, You got to wait. Let that stock, first of all, on the way down this morning, I told them, let's follow how much volume is on, I said this morning, on the way up. As the market was breaking up, I said, let's track the volume on the way up. Let's compare it to the volume on the way down. Do we have more buyers today buying, or do we have more sellers that were selling the other day, and do we have less buyers today? If we have less buyers today, and the sellers all these other days were overwhelming, this won't hold its high. And guess what? It's exactly the situation. Would you have to go out with a pen and pencil and figure out if they got more buyers or less sellers? No. Your trend tells you. Now, if you're looking at my chart, you can see the trend right here. Your trend will always tell you. The trend is your friend. Look at this. The trend was going down. The trend continued to go down. The trend's been going down. What? My God. This stock has been in a downtrend since October 15th. And when the stock rallied from October 27th or to October 24th to October 29th, they were buying. If they were smart, they see the trend was going down, it would tell them, get ready to short. More when I come back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grandy at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox Business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grandy at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
Welcome to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
And welcome back. Okay, listen to this.
There's definitely a bubble in the markets.
Oh, wait a minute. I thought we were told the opposite.
I guess I'm not at the point where I'm calling this a bubble.
So who's telling the truth? Well, the market will tell you the truth. You know what to look at. Look at the bond market. It'll tell you the truth. The bond market always will tell you the truth. Look at your trend. The trend will tell you the truth. The market will never lie to you. The trend will never lie to you. The trend's always the truth. And again, take yields. Yields are going up. What's that telling you? Well, it tells you if all of a sudden if all of a sudden the price starts collapsing on the bond market, then these yields are going to go straight up. We're going to have a hell of a crash. And right now, yields are going up. That also means that we're into stagflation. Now, under the Biden administration, they denied we were in inflation. Then we got to 9%. We went from inflation to stagflation, and they denied such a thing. I mean, that's kidding. You got to be kidding me. We still have inflation. We're not resolving our inflation. We're at 3%. So that's bad. So raising interest rates is what you need to do to combat inflation, not cut Fed rates. That's what he's doing. He's always wrong. Powell has no path to be right about anything. This is a stock market like a boat with no keel. With no keel. So, yields are going up. That means rising interest rates. That's a big problem for the tech stocks. The tech stocks alone are having problems because, again, the hype is much stronger than the returns that are coming in. We also have another big problem. Our debt, our deficits, our three biggest lenders, Japan, China, UK, they're not buying our debt. They're not buying our debt. That's really bad news. We don't have somebody buy our debt. They're not buying. They're buying gold instead. And let's talk about gold for a moment, talking about trend. GDX, okay? GDX has been one of our big stars, okay? And we started to buy that early before anybody else was buying GDX. Now, if you take today GDX, if they ask you the question, what do you think what do you think GDX is going to do? You think they're going to go up or not? No, the trend is still down. The trend is down. Now today the trend started to cross over a little bit. It's starting to change, but ever so slightly. So you could see, even though we had a good day in the morning where gold GDX went back up, GDX hit a high of 77.74. It's right back down towards the slow again of the day. Why? Because look at the trend. We don't have a solid trend. Yes, it broke through. It's just starting to go to an uptrend, but we don't have enough of a trend. See, when you get an uptrend, remember what happens. Think of your volume as gasoline. When those volume bars start going up, that's pushing the movement of your candlesticks on your stocks up and down, up and down, up and down, all day long, up, down, up, down, up, down. At the end of the day and during the day, if you're looking for direction, which way is my stock going, what do you look for? Let's take a look. Let's go back to NVIDIA, okay? A great example. Go back to NVIDIA. So NVIDIA, which was the big star, as NVIDIA was rallying today, the trend was going down. Now, if you look at GDX, our gold, our miner today, it was starting to rally, but I told my members, look, do not add to GDX. When it was at 73.39 and it got up to a high today of 77, I said, do not add to it. Do not buy it if you don't own it. Remember, we've been in the stock a long time. Wait till it takes out the high of October 16th. If GDX takes out the high of October 16th, you're going to have enough volume to hold that stock. It'll keep on going. You got a higher probability of GDX going to 185 from $85.09 than you do from $79 or $73.42. But people don't understand. They can't understand that. See, most people think, get me in at 73.42 before it gets to 75. Get me at 75 before it gets to 77. No, that's not how it works. Because see, between 73.43 and the high back here in October 16th of $85, so 73 to 85, you got sellers you got to get through. How are you going to get through them? Those are massive sellers. How are you going to get through them? You need what? Volume. What does volume do? Okay, you look at your volume bars. That's telling you if buyers are coming in and taking over the sellers, or if the sellers come in and taking over the buyers. But that is what moves your candlesticks on your chart. And then finally, when you look at your stochastics on your chart, it will tell you what is truly going on. Is this trend where GDX dropped on October 16th and it dropped all the way down to November 4th? It dropped, remember, from $85 down to $68. When that was dropping, the trend told us not to buy. While Wall Street's telling you, buying a dip, cost average down. One of the 7 sins. That's crazy. That's crazy. Anybody tells you to cost average down as it's in a downtrend should go to jail. They should be responsible for you losing money. You never cost average down. You're going to get yourself in a worse position. Now, today, as GDX started to push up, hoping to make a new trend, it's far from a new trend. It's not established yet. So what do? So instead of getting it at 73.40, why don't you wait until it gets past the high of October 16th of 85? Then the chart will start turning green and you buy. See, that's what people don't understand. You got a higher probability of GDX of getting to 185, okay, from passing through the October 16th high of 85.09 than you do right now at 73.39. You can't get people to understand that. You can't get people to understand that the trend is still down on these stocks. NVIDIA, the trend is still down on NVIDIA. And they all jumped in this morning with the trend down. Now take a look at the bank stocks. The only stocks that are doing well are your Lilly. These are called power stocks because they have tremendous relative strength. While the market's going down, these stocks are going up, Lilly. But look at the trend on Lilly. It's up. Look at the trend on Merck. It's up. Look at the trend on J&J. It's up. Now go back to your favorite NVIDIA. What's the trend doing? It's down. So why did the stock fail today? Why did it go from 182 up to a high of 196 and then it gave it all back? Because no one looked at the trend. We did. We teach that every day. The banks that were starting to look pretty good are getting in trouble now. You can see the trend that was up on JP Morgan. Look at the trend. We made a lot of money on JP Morgan. We started to buy JP Morgan all the way back. We bought JP Morgan all the way back starting around April 28th. It's over now. It's over. And now what's happening, the banks were all holding in, but they're not holding in anymore. Now the trend is changing. This is going to be a great shorting opportunity. That's going to be a great shorting. Bank of America is getting ready to be a great shorting opportunity. Now, what do I mean by that? Once we get the sell signal on our chart, which our candlesticks turn red, we have 2 areas where we get a sell signal. We'll start shorting. But there's no misunderstanding here that the banks that were doing well are now going to do poorly. They're going to start going down, so we'll be prepared. See, you're never surprised by your stock going down. If you're surprised by your stock going down, you go, oh my God, my stock's going down, what's going on? That means you never looked at trend. You have no idea what trend is. You don't have any clue what trend is. You're going to get slaughtered every time. The only time you make money is when you get those days that everything's going up. Then you always give it back. All you have to learn is a little bit about trend. And if you don't learn how to sell short, if you're always trying to buy, and you're always trying to catch trends that are going up, that's nearly impossible. That means every trade you make, you're trading to perfection if you don't know how to sell short. You've got to follow the money that goes in. And money that goes in makes the trend. The money that comes out makes the trend. Stop listening to what they tell you on these TV shows, these jibber jabbers. So right now, there's only a few stocks that are still living and alive. Amgen, Lilly, Merck, Johnson & Johnson, and we're taking profits left and right in these. The next group that we were heavily involved, as I said, the banks. We've taken almost all our profits in these stocks. They're getting ready to collapse. We can see the trend. We can see the volume. We can see the selling coming in. That's the beautiful thing about following trends and have the right chart. So the banks that were really doing well are now rolling over. And look what's going on with the banks. The Federal Reserve had to put $50 billion to get together in a pot at the end of October. Now they're putting another $300 billion together because the banks are in deep trouble. The banks have no money. The banks are under pressure because everybody, between the defaults on the credit cards, delinquencies on credit cards, automobiles, homes, they're in trouble, the banks. But I don't need to go to listen to anybody on TV. I can keep my TV off all day long. I don't hear what these people are saying. What I want to look at is, okay, look at this, Bank of America. I'm getting ready to short Bank of America. Not right now, but the trend is setting up. I'm going to be following that. And then when I finally get on my chart the short signal, it's always right, it's never wrong, I'll short it. You always got to be ahead of the stock. What my point is, everybody's surprised when NVIDIA went back down today. I'm telling you the truth. Ask my members. I said, this stock's not going to hold. Don't buy it. It's going to go back down, and it did. Because the volume and the trend told me. The chart told me. The bond market told me. Now you go down. Now so there's only one group. There's one stock's been holding up the whole stock market has been NVIDIA. Now that one's dying. The only group that's holding up the whole stock market is 4 stocks: Amgen, Lilly, Merck, and Johnson & Johnson. Gold is going to be a huge winner. When people finally start realizing there's going to be a crash, and my guess it's going to be somewhere in the first or second or third quarter of 2026, that's when all the big margin calls are going to come in and hit all the retail customers, all the tourists, all the FOMOs. We have historic amount of margin debt, and we've never had so many people buying stocks. This is equal to the time it was in 1929. Everybody was buying stocks in 1929 and couldn't afford a stock. We're right back to that. But we're not going to be surprised on any individual stock that's going down, and we're not going to be surprised on any indice that's going down, whether it's the small mid-cap stocks or the spiders or the Qs. If anybody is surprised, if they ever say, oh my God, you see what happened to that stock today? It went down. Boy, am I surprised. You're doing something wrong. You'll never make money in a market. In the long term, you'll never make money. Think about why is it that 90% of people lose money in the market? Because they can't identify in advance if their stock is going to go down or not. They listen to these morons on TV, the jibber jabbers. And they write down some stock they give them. Oh, they must know, they're on TV. No. They're not going to educate you like I do. I've been educating people since 1998. It's frustrating because the TV programs are so powerful and people want to make money easy. Everybody does. I do. And they think because the guy's on TV, he's smart. Don't follow the guy on TV, follow the trend. Who makes the trend? The institutions. I'm reaching out to you. Let me help you. See you on the charts.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.